Back here for hour two of Yarbrough on this beautiful Thursday in East Tennessee. News Talk 98.7 WOKI. Dan Bongino this hour. The FBI Deputy Director talking about a handful of high-profile cases and where they stand. We've got the comments and the clips for you. Make America Healthy again this hour. Whole bunch to get to here coming up in the next 60 minutes on Yarbrough. We start, though, with our friend Jim Brogan and Brogan Financial, who joins us from time to time. Boy, we picked some good times to have you come on, Jim. I mean, it seems like every time we get you in for whatever reason that there's something going on in the financial worlds. First off, good morning to you. It's good to have you in. How you been, friend?
Hello, Bob. I'm doing great. Thank you so much. Great to be with you.
Absolutely. All right. So what stands out to you these days about what's going on in the financial world, stock market, whatever it might be?
Volatility and uncertainty. And I think the markets are having a hard time getting their arms around how to take Donald Trump in the White House, because he is very disruptive. But, he comes out with one thing, and then that's not necessarily what he's going to keep in place. And I think that's just a very different style of governing that the Wall Street's not used to. And so investors are just not sure how to react to that. Markets don't like uncertainty. Now, when it's all said and done, the reality is markets have come back. I mean, it was really remarkable, as bad as things were looking in April, the way things have rallied since then. But I think while all this is going on with tariffs and all these other things, I think markets are going to continue to be a little bit choppy, at least for several more months.
Boy, they do react so quickly. I mean, he mentions a tariff one day, and the markets drop several hundred points. He rescinds that tariff the next day. They go back up several hundred points. Is this disruption, as you call it, does it have any positive aspect to it?
Well, as far as impact on the markets, I don't know. That's a great question, Bob. I don't know that I think that this type of whipsawing back and forth, I don't know that that's great for markets. The problem is investors let emotion get in the way. Emotion is really one of the biggest enemies of wealth creation and wealth management and successful wealth. And our human emotions make us tend to do things. We don't buy. Our emotion does not buy low and sell high. Our emotion tells us to buy when everything's up and buy high, and then we want to sell when things are down. We want to buy high and sell low. That's what our emotion does. And so I think the biggest thing is to keep perspective. When Trump announced the tariffs on April 2nd, I mean, next week we talked about it, Bob. I mean, I don't think anybody thought what he announced April 2nd would be what would be in place in 60 days.
Yeah.
And sure enough, it's not. And yet economists would get on these news programs and even the financial news and talk like, a 125% tariff with China is what we're going to have for a while. Nobody really believes that. And so I just think it's important to know that markets can always be very, very unpredictable and volatile and choppy. That's kind of like the one certainty about markets is they're uncertain and they're volatile potentially. And so we have to understand the perspective of when are we investing for? When do we need this money? I'm not a big believer in speculative, buying something with the hope that in the next 2 to 4 weeks it'll go up in value. That's speculation. Investing is saying I'm investing for the long haul, and there's going to be ups and downs. The key is that I can count on that money being there when I need it, which, again, is kind of all about time horizon.
Yeah, certainly that's the important part of this is the money there when you need it. You referenced the stock markets and everything's kind of rebounded. I don't know exactly where the markets were when the tariff talk began, but for the most part we're at break even from the beginning of the tariffs.
Markets,
wow.
Well, actually from the beginning of the year. Markets are about break even. I don't know if they're completely well, and they were down through March. The S&P 500 was down about 4.5% through March. Here's what's funny about the month of April. And I don't want to say it's funny because again, it takes us on this whiplash of emotional roller coaster. But if you had gone, in the month of April, the S&P 500 was down about 0.5%. Well, if you had gone to bed on March 31st, Bob, and woken up on May 2nd and looked at your statement, you'd have thought, oh, not much must have happened in April. Now, the media is not covering that. For the first 3 weeks, it was all about how people are losing hundreds of thousands of dollars in their 401k. And that's where we just have to be careful how we digest news. But the reality is, at the end of the month, it really was kind of a flat month. I mean, down 0.5%.
Yeah, you do see all the headlines, markets dropped 700 points or whatever it is, down X number percent since whatever date they choose. But when it rebounds, you rarely see that, by the way, your 401k has rebounded. It's back to where it was a month or two ago. You don't see those headlines too often, do you?
No, you see these headlines of the trillions of dollars that were lost. Right, those were lead headlines, and that's market value on paper. Well, those same things didn't come back and say, that one day when he rescinded the reciprocal tariffs for 90 days, and the market went up almost 10%, like 9.5%. Well, there was no article in Bloomberg or in the Wall Street Journal, and Wall Street Journal is probably a little to the right of center, but there was no articles or headlines saying how much wealth was created on that day.
Yeah.
But they talk about it when it goes down.
Sure. I guess maybe day traders are loving these wild swings, but boy, that's certainly a gambling proposition if you try to get in there and do some day trading with the markets, no doubt.
Yeah, that's the difference in speculation and investing.
Yeah. And investing is what we're talking about. Let's talk about a new survey published by AARP. Said 1 in 5 Americans age 50 or older have no retirement savings, and more than half, 61%, are worried they won't have enough money to support them in retirement. What can folks who might fall into these two categories do to help have some type of retirement?
I think the number one thing they need to do is figure out how much money they're spending and track that. Just track it for a couple of months so that they can get their budget in line where they can save more. The last 10 years before retirement, Bob, typically are our peak earning years. And that's when this year we can put as much as $31,000 tax deferred into a 401k, plus the employer match. And if we have a Roth option, we can put $31,000 in the Roth 401k plus the employer match. So, in our peak earning years, we should be saving larger amounts of money than we ever have. But to do that, we have to know what we're spending, and we have to be able to budget things and account for everything. And so I think the first thing you got to do is know how much you're spending and where it's going, and then create a plan to understand, how long are you going to need to keep working. We see more and more Americans today are working part-time in retirement. And they're calling them second careers. And many are doing it out of financial necessity, but a lot, Bob, are doing it because they do it for quality of life. And so I think people need to kind of reshift how they think about retirement. If you're in your 50s or early 60s and you don't have much saved, you do need to know your Social Security benefits. And remember, they increase pretty dramatically if you wait till 70. That's another benefit of working a little bit longer. But I think you just kind of have to know where are you and what's likely, and how can you it's not you work full-time or you don't do anything. So there's a lot of in-betweens.
Yeah, and please know that if you haven't really prepared as well as you had hoped for retirement and you're in your 50s, you still have some things that you can do. And Jim just outlined a handful of those, and they'll get you more advice and more ways to kind of get ready for retirement. What about those who say, okay, I enjoy working, I'm not ready to retire? A lot of folks want to continue to work as long as they can. What are the things you might suggest folks think about if they're going to push that retirement date, say, into their 70s or even later than that?
I think what that hits on, Bob, that's very important is it's about quality of life. And, the whole idea of retirement didn't even exist until the 1800s. And it was created by the Germans because they had too many people in government and in the military, and they needed to kind of start forcing them out. So, work gives us a lot of fulfillment. So I think people need to look at quality of life. I can't tell you how often I've had clients that, when they first met me, said, Jim, I'm going to retire in 2 to 3 years. And it's been 8 years, and they're still working. But they're doing it for some of it is, and a lot of it's quality of life. Now, some of it's financial, too. I mean, the reality is, even adding, when we run retirement projections, Bob, even adding 1 year of work to the equation before you have to start drawing from your nest egg can sometimes be a game changer in terms of how retirement income projections look. So just understanding those types of nuances and then making a quality of life decision.
Boy, I guess when you do get to that point and you go, you mean 1 more year of working allows me to do this in retirement, and it's so much more than you might realize. Maybe it is a little bit worth it to go beyond whatever your retirement date you've selected might be. Jim hosts a show here. How long have you been doing More Living with Jim Brogan on News Talk 98.7?
Bob, believe it or not, September will be 20 years.
20 years. It seems like the last time I asked you this question, it was like 16 or so years, but you're coming up on 2 decades.
We're coming up on a big anniversary, yes, sir.
Wow. Well, it's a great show, and it's on from 9 till 10 Saturday mornings, and then you can hear it again from 3 until 4 in the afternoon. What's on More Living with Jim Brogan this weekend?
I've got Dr. Andy Puckett from the University of Tennessee. He's in the Department of Finance. And we're going to talk about the economy. We're going to talk about markets. We're going to talk about the impact of tariffs. We're going to talk about all this stuff, and then maybe most importantly, how it can affect your money moving forward.
Very good. All right. Jim Brogan and More Living with Jim Brogan this Saturday, 9 till 10 and 3 until 4. You can also reach out to the Brogan Financial Crew at 865-862-6800 and visit online at broganfinancial.com. Jim, it's always good catching up with you, and I look forward to speaking with you again very soon.
Thank you, Bob. I do as well.
All right. Jim Brogan, and we'll be back on Yarbrough in just a moment here on News Talk 9.